Should people expect shortages or price increases for certain meats in the weeks ahead?
Several beef factories have been forced to shut down. Nearly 24 plants are functioning under capacity.
There is going to be a shortage.
It's been a volatile and crushing few months for the meat industry. In March, the shelter-in-place orders and shutdowns caused a complete shift in purchasing behavior. Panicked consumers moved from spending more than half their food expenditure outside the home to mostly eating at home. On top of that, an entire market was cut off when restaurants and schools were shuttered. By April, the coronavirus started wreaking havoc on workers in processing plants.
These are very different causes that created different sorts of disruptions in the sector. Both of them really unprecedented in terms of any other events that we've ever seen.
Sick workers meant a broken supply chain. Dozens of plants shut their doors, and producers had to keep their live animals on hold. For the month of April, production of beef and pork dropped by 21% and 11% respectively. Some farmers resorted to euthanasia.
You can't just stop pigs from being born and continuing to grow. And so when you have a group that gets stuck in the finisher and can't move on to the packer, you then have the group behind them that's knocking on the door.
Despite President Trump's use of the Defense Production Act, many meat packers struggled to stay open. Live cattle and pork prices dropped by 25 to 40%, while wholesale prices more than doubled. Near the end of April, meat prices at the grocery store had spiked 8%.
We saw the largest daily increase and the largest daily decrease in the past 20 years within just the past couple of months.
Recent studies estimate 2020 losses to be $13.6 billion for the beef industry and nearly $5 billion for hog farmers. But the supply chain's fragility and the repercussions that have followed could last for months, if not years. So how did this happen? Meat is a huge business in the U.S. It's no coincidence that a burger is the quintessential American food.
We had a big backyard barbecue. We had hot dogs and hamburgers.
Americans consume more meat and poultry than any other country in the world, about 220 pounds per year. The meat industry is as complex as it is diverse. While the basics of the supply chain is pretty much the same across the board, the nuances within each animal type or each phase are manifold.
Poultry, it's almost entirely a completely vertically integrated industry, which means that the integrator, think Tyson or Sanderson Farm, owns the chicken from the day it's born until it's sold to a grocery store. You have farmers who contract with those integrators to grow out the animals, but they never own the animals. They provide a barn, but even the feed is provided by the integrator. About 40% of hog producers operate on this kind of production contract. There are still independent hog producers, and how they sell those hogs depends on their relationships with the packers. Hogs are sort of in the middle of chicken and cattle, where cattle is a much less vertically integrated sector.
It takes a cow anywhere from 21 to 30 months from the time it's conceived until it's ready for processing. During that time, the animals can go through multiple owners, leaving producers with small margins and little room for sudden shocks. In 2019, the average price of live cattle was $1.20 per pound, while the average wholesale price was $2.23 per pound. That precise price gap has led to long-standing conflict between producers and processors.
Ranchers and packers have always not liked each other, particularly the ranchers, basically not trusting and assuming that the packers are manipulating markets. There is very little research evidence that supports that.
While the live side of the supply chain involves thousands of small and medium-sized businesses, the packers and processors are dominated by 4 key players: JBS, Tyson Foods, Cargill, and Smithfield Foods. They control 50 to 83% of supply depending on the animal. In 2019, the industry revenue was $230 billion, nearly twice that of the live side.
It's a high-cost, high-capital business, and also working capital, as you're buying livestock every day. And so it's a very difficult thing just to, start and be successful at, but that's partly led to this high degree of concentration because of how critical it is, the economies of scale, and consequently that's why we've got fewer and larger plants.
The meat industry has experienced 2 crises during the coronavirus pandemic. While dramatic, the first was short-lived. Supply chains adjusted to restaurant and school closures and shifts in consumer behavior within the first month.
More meat plants shutting down tonight as workers get sick.
The second wave has exposed the meat processing plants' vulnerability to the virus in unimaginable ways.
To put in place guidance that these plants were taking to protect their workers. That hadn't been done soon enough, and so now we have the current problem.
The CDC states that nearly 5,000 workers have contracted the virus, and 20 have died. But according to the Midwest Center for Investigative Reporting, who use news reports, press releases, state data, and original reporting, the numbers are much more grim. As of June 4th, at least 20,400 workers had tested positive, and 74 had died.
I think there are some legitimate issues relative to the worker situation, particularly on the front end of this thing. I'm not sure anybody really understood sort of how to be prepared. These meatpacking plants, by their very nature, are extremely difficult to manage a human disease like this.
Since early April, at least 48 processing plants have closed down temporarily or indefinitely. Compared to last year, production dropped by 34% for the week ending May 2nd. For some hog and chicken farmers, euthanasia was the last resort. Many didn't have the space, and putting on more fat decreases their value. Cattle is more flexible when it comes to weight gain, but for all animal producers, it boils down to economics.
They can only stand this for so long, so they might go out of business, or they may just get into sort of a financial hole that will take them perhaps years to recover from.
By May 1st, beef wholesale prices were up 67% and live cattle was down 24%. Pork wholesale prices increased by 100%.
There was a number of cattle that were coming through the system, and hogs too, that were scheduled to be marketed at whatever price. And then all of a sudden, there's just basically no demand for some of those cattle because the packing plants simply cannot process them. And of course, at the same time, the cattle prices were going down because the packers simply couldn't demand all the cattle that were out there. That's what's got producers so upset right now. They see their price going down at the same time the meat price is going up, and they think that means that something nefarious is going on. And it's absolutely not. It's because those marketing costs have gone up dramatically, and the supply and demand in the two markets are quite different right now.
On April 26th, Tyson Foods CEO John Tyson took out a full-page ad in multiple newspapers warning the nation of a meat supply shortage. He wrote, "The government bodies at the national, state, country, and city levels must unite in a comprehensive, thoughtful, and productive way to allow our team members to work in safety without fear, panic, or worry." 2 days later, President Trump signed an executive order to invoke the Defense Production Act. Now the plants were deemed essential infrastructure and had to remain open. More importantly, the order protected companies from legal liability if workers got sick. The industry praised him while the workers' unions condemned his decision. By the second week of May, prices started to bounce back as more and more plants opened up. As of June 4th, wholesale prices for cattle were $272.26 per 100 pounds of cattle. That's down 43% from May 12th. Live cattle prices were $105, while live hog prices were still lagging.
These workers have to stay more spaced out in the plants. That basically means that you can't process as many cattle. So the capacity, quote, full capacity now is probably going to be maybe 90% of what it was before, at least until this fall.
It's unclear if the worst is over for the meat supply chain or that the coronavirus pandemic has exposed a fragile supply chain that will require some serious adjustments. One thing is for sure. Having so much hinge on a few companies' ability to get meat into consumers' hands leaves the supply chain vulnerable in times like these. It remains to be seen whether it's the right decision to open many of the plants.
Whenever you have a big labor challenge and it drives up the costs of maintaining a labor force, or it causes supply chain disruptions, you see automation. If you go to a McDonald's now, you can order from a person or you can order from a board. Could you see the same thing in large-scale processing? Absolutely.
In the meantime, alternative meats are having a surge despite their higher price point. Between mid-March and the end of May, the Beyond Meat stock price increased by more than 130%. Sales of fresh meat alternatives grew by more than 250% for the 11-week period ending May 16th. Even before the pandemic, experts recognized huge potential in the alternative meat industry. Ultimately, it all depends on how our lives and the economy recovers. If unemployment continues to rise or even lags for years, people will trade down from more expensive to cheaper cuts of meat, perhaps less meat altogether.
Is this a once in a century event? Should we respond accordingly? Or is this something that we need to adapt to going forward because it's going to be with us? If we think it's going to be with us, then yeah, it's a pretty fragile supply chain, mainly because we've focused on giving consumers what they want. High quality food at the cheapest price possible. If we were to back away from that and make it a little bit maybe more robust supply chain, maybe a little bit smaller processors, it's going to cost consumers a little bit more. So there's a trade-off there.
Hopefully the immense stress that was on the sector, at least we've got some release valve now that processing facilities are moving again. There have been a number of large packing plants that haven't had to close during this time. There's no guarantee that their workers won't become ill, but hopefully we've learned through this process and been able to get us on a more positive path.